Most traders don't fail because they lack strategy, indicators, or capital. They fail because of one invisible mental trap that slowly eats away at their confidence, decision-making, and discipline. It's not FOMO. It's not greed. It's something far more subtle and far more destructive. In this video, we're exposing the hidden psychological loop that silently ends 99% of trading careers. You might be in it right now and not even know it. The worst part? The smarter you are, the deeper you tend to fall. Have you ever doubted yourself after every loss? Jumped from system to system, hoping one will finally click? Felt like you're stuck in a cycle of emotional highs and lows? You're not alone. This isn't just about mindset. It's about how your brain is wired to lose in the markets, unless you fix it. In the next few minutes, we'll break down what this trap is and how it disguises itself as logical thinking, why it destroys discipline and consistency, and most importantly, how to rewire your mindset to escape it for good. If you're serious about surviving and thriving in this game long-term, this is the most important video you'll watch this week. So pause your charts, close those random tabs, and let's fix the trap that's quietly ending trading journeys every single day. Hit like, subscribe, and turn on the bell icon, because the psychology edge is the only edge that never fades. Section 1. The Hidden Hook. You didn't get into trading to lose sleep, but here you are again. 3 a.m., wide awake, eyes burning in the dim light of your phone screen. You're refreshing your charting app for the 100th time, like something new might suddenly appear. Maybe the price spiked, maybe it collapsed. You're not even in a position right now, but your brain won't let go. It's chewing on something invisible, something unresolved. This wasn't how it was supposed to be. You remember the first time the idea grabbed you. Maybe it was a video. Maybe a friend mentioned it. Maybe you stumbled across some post on Reddit that showed a guy turning a few $100s into 5 figures in a week. It felt electric. Instant possibility. Freedom. A life outside the ordinary. You weren't trying to gamble. You were trying to escape. And in the beginning, it felt possible. You opened a demo account. You started clicking around. You watched price bars move and felt like you were learning a secret language. Green was good, red was bad. You told yourself you weren't in this for shortcuts. You'd be disciplined, strategic, professional, a student of the game. But slowly, things shifted. You placed a real trade, small size, just testing the waters. It worked. The high that followed was a strange cocktail. Pride, disbelief, hunger. You thought, I can do this. And then you lost. Not much, but enough to feel that sour sting in your stomach. And suddenly, the hunger changed. It wasn't about freedom anymore. It was about fixing something that felt broken. That's when the trap started to close. Here's the thing nobody tells you when you begin. The real danger isn't the market. It's the loop inside your head. You don't see it right away. It masquerades as diligence. It tells you to stay informed, to monitor your setups, to stay sharp. But in truth, it's panic in disguise. You're not analyzing. You're spiraling. You're no longer waiting for opportunity. You're searching for relief. Relief from uncertainty. Relief from the ache of not knowing if you're doing it right. Relief from the shame of telling yourself you're failing at something you thought would set you free. This is the trap. Not losing money, not making mistakes. Those are expected. The real trap, the one that ends 99% of trading journeys, is the belief that you are only as good as your last trade. It's the identity hook. And it's brutal. Because now, every tick in the market isn't just a number, it's a referendum on your worth. Every red candle is a condemnation. You can't win enough to feel safe, and you can't lose enough to walk away. So you stay.
You linger in the limbo. You hop between strategies, you tweak your rules, you journal like crazy and listen to podcasts, and change indicators and switch timeframes and backtest your entire life. All of it feels like work. All of it feels like progress, but none of it solves the core problem. You're trying to fix a psychological wound with technical tools. You keep asking, how do I trade better? When you should be asking, why do I feel like I need trading to prove who I am? Because that's the real problem. You're not addicted to trading. You're addicted to the emotional resolution you think trading will provide. You want clarity, control, validation, a win that says you were right all along, that you weren't crazy to believe in this, that you aren't wasting your time. But here's the paradox. The harder you try to extract emotional certainty from the market, the more unstable you become. The market doesn't care. It's not designed to comfort you. It's designed to reflect collective uncertainty. It's a mirror held up to human fear and greed, including your own. And if you're measuring your self-worth against a mirror that changes every second, you'll never find peace. The first step in breaking the trap is this. Detach your identity from your outcomes. Simple, not easy. You have to begin by seeing your trading behavior for what it is, not just technically, but psychologically. You have to notice the moments when you feel that twitch to check your P&L, even when nothing has changed. You have to feel the anxiety spike when a setup is forming and you don't want to miss it. You have to admit that your research is often just a form of self-soothing. Awareness breaks the spell. You can't fix what you won't face, so let's face it. You've been trying to use trading to solve a personal problem, one that goes deeper than charts, entries, or exits. Maybe it's about proving you're not average. Maybe it's about redeeming past failures. Maybe it's about financial survival. Maybe it's about feeling competent at something in a world that often makes you feel small. Whatever it is, it's not wrong. It's just misplaced. Trading is a brutal teacher because it exposes every unresolved part of you. The need to be right, the fear of missing out, the shame of being wrong, the hunger for status, the avoidance of discomfort. And unlike other professions, it offers instant, real-time feedback. You feel seen and judged by a blinking number. But here's the truth you'll need to sit with if you want to survive. You are not your trades, and the market cannot complete you. It can only mirror what's already inside. If you don't recognize that, you'll chase certainty forever. And that chase is what ends 99% of trading journeys. Not a blown account, not a bad system, but a slow, soul-crushing exhaustion from trying to get emotional clarity from a source that will never provide it.
But there's a way out, and it starts with a question. What if trading was never supposed to fix you? What if it was supposed to reveal you? Let's keep going. Section 2. When you become the chart. You sit down at your desk, coffee in hand, screens glowing. You tell yourself today will be different. You'll stick to the plan, you'll wait for the setup, you'll execute like a pro. But somewhere deep down, a quiet hum is already building. It's not the market moving, it's your nervous system. Your hands feel slightly electric. Your mind is preloaded with scenarios. If this happens, I'll do that. If that happens, I'll do this. You're not planning. You're preparing for a storm, and you don't even realize that the storm is coming from inside you. The chart loads, candles print, a familiar pattern forms, and before you even check your rules, your finger is already hovering over the buy button. Click. You're in. And now the chart isn't a chart anymore. It's you. Your ego is inside the candle. Your identity is floating in the spread. The moment you entered the trade, your sense of self fused with the outcome. You don't just want this trade to win. You need it to. Because a win confirms the story you've been telling yourself, that you're improving, that you're sharp, that you're evolving. And a loss unravels the whole thread. It calls everything into question. Not just the setup, but the system, the plan, the process, the very idea that you're cut out for this. You refresh your chart like a gambler flipping cards. You zoom in, then out. You switch time frames. You count candles. You Google news. Your breathing changes. Your chest tightens. You tell yourself you're just monitoring. But really, you're trying to control what can't be controlled. This is what it looks like when the market owns your psychology. You're no longer trading a system. You're trading your self-worth. And this is the second stage of the trap. Stage 1 was identity fusion, tying your value to your outcomes. Stage 2 is emotional over-identification with every tick. It's when the market becomes a battleground for your deepest insecurities. It's when you forget that your trading system was designed to operate across dozens, hundreds of trades. Not this one. But you can't think in batches anymore. This trade is everything. And that's how the spiral begins. Every move the market makes feels personal. If it goes against you, you feel attacked. If it goes your way, you feel relief. But it's temporary. You watch your P&L like a hostage negotiator, terrified of what the next candle might do. You don't even care about the setup anymore. You care about the feeling you'll get if you're right. And that feeling, validation, relief, superiority, redemption, is fleeting. It never lasts. So you enter another trade, and another. You convince yourself you're just being active, but you're not. You're chasing emotional payoff. You're using the market to regulate your mood. And that's the problem, because trading rewards detachment, and you've become emotionally entangled with every pip. You can't see the gain because you've become the player, the referee, and the prize, all at once. So how do you fix this? First, you have to spot it in real time. It starts with a single question. Why am I in this trade? If the answer is anything like, to feel better, to prove I was right, or to make up for that last one, you're not trading, you're medicating. You're using the market like a pill, and the side effects are brutal. Mood swings, overtrading, impulsive exits, endless strategy hopping, self-doubt disguised as research. You'll call it optimization, but it's panic in a lab coat. The fix isn't more data, it's more awareness. You need to zoom out, mentally, emotionally, spiritually. You need to remember what the chart is. It's not a moral scoreboard. It's not a mirror of your value. It's not a prophecy machine. It's just a stream of probabilities playing out. Some of them will align with your edge. Most won't. That's it. Your job is not to control the stream. Your job is to build a tiny boat that floats within it. Your system is the boat. Your rules are the oars. And your psychology is the way you steer. But if you start swimming in the water, if you start tying your identity to every wave, you'll drown. It's inevitable. So here's the second practice in escaping the trap. Learn to witness, not just react. This means developing the skill of meta-awareness. It means noticing the thoughts about your thoughts. You feel an urge to check the chart. Pause. You feel excitement before a trade. Pause. You feel dread after a red candle. Pause. Ask yourself, what am I actually responding to? Is it data, or is it fear dressed up as urgency? This practice won't eliminate your emotions. It's not supposed to, but it creates space. And space is where your power lives. Space is where you choose not to press the button. Space is where you sit with the discomfort of not knowing and learn that it won't kill you. That's how you build resilience. Not by eliminating emotions, but by learning to coexist with them without letting them drive. Remember, your trading system is only as good as the version of you executing it. And if the version of you that shows up is emotional, compulsive, and hungry for resolution, no amount of backtesting will save you. This is the psychological leverage most traders ignore. They work on setups, they ignore selves. But you're seeing it now. You're beginning to understand that the chart is not your enemy. Your emotions aren't either. They're just signals, clues about. Section 3. The Scarcity Illusion. It's late again. You're staring at your screen, waiting for something to line up. You know you're tired, but the thought of logging off feels like surrender. There might be a setup just around the corner. Something clean, something obvious, something that makes the hours worth it. You convince yourself you're just being patient, but really, you're afraid of missing out. This is where the third layer of the trap shows up: scarcity. It whispers that opportunities are rare, that if you don't act now, someone else will. That this trade could be the one that changes your week, your month, your whole career. You can almost see it happening. A few good trades, a lucky run, your equity curve finally breaking the plateau. But that's the illusion. It paints urgency on top of randomness. It adds emotional weight to moments that should be routine. It tricks your nervous system into thinking you're making life and death decisions, when really, you're just reacting to lines on a chart. Scarcity is a liar, because in trading, opportunity is not rare, but your perception of it is. Scarcity is what makes you force trades that aren't there. It's what makes you widen your risk when you shouldn't. It's what makes you enter early, exit late, and abandon your plan when you're 3 minutes into a session. And worst of all, it convinces you that if this one doesn't work, you won't recover. That kind of thinking turns every red candle into a threat, every missed trade into a wound, every losing day into a crisis of identity. But let's stop here and get honest. When did you start believing that the next trade was your last shot? When did the idea of waiting for your setup begin to feel like failure? The deeper truth is this: your sense of scarcity doesn't come from the market. It comes from your mindset. If you grew up around financial instability, if you've ever felt behind in life, if you've internalized the pressure to succeed fast, scarcity will cling to you like static. It will follow you into every chart, every decision, every flicker of red or green. You'll tell yourself you're trading price action, but what you're really trading is fear of not having enough. And that fear is invisible until it owns you. So what's the fix? First, you need to understand that the market doesn't run out. It's a living, breathing organism of human behavior. It expands, contracts, offers, retracts. There is no single golden moment. There is no one perfect trade. There is only flow, and your ability to wait for alignment within it. If your edge is real, then your job is simple. Preserve yourself until the edge appears. That means you must learn to treat inaction as a skill, not just a lack of trading, but an intentional discipline. Every time you don't take a subpar trade, you've won. Every time you sit through boredom without forcing an entry, you've sharpened your edge. Every time you walk away instead of chasing resolution, you've separated yourself from the 99%. Scarcity screams, "You're falling behind." Wisdom whispers, "You're right on time. Most traders lose not because they're wrong, but because they're early. Too fast, too eager, too desperate to be in something. They need to feel like they're progressing. But in the market, real progress often looks like waiting longer than you're comfortable. So here's your next layer of freedom. Develop a high opportunity mindset. This means believing and proving to yourself that there are infinite setups ahead. It means tracking patterns that repeat. It means reviewing your own journal to see just how many times the same trade has reappeared again and again. It means reminding yourself that no single candle matters. No single day defines you. Your career is not made in a week. It's made in how you manage your edge over time. And to do that, you need energy. You need presence. You need clarity. Scarcity strips all of that away. It burns your energy on bad trades. It pollutes your presence with fear. It clouds your clarity with false urgency. And all of that leads to exhaustion, the kind that makes people quit not just the trade, but the dream entirely. Don't let that happen to you. Start practicing abundance in your mindset. Instead of saying, "I have to catch this move," say, "There will always be another." Instead of saying, "This is the only setup I see," say, "More will come if I'm patient." Instead of that is psychological mastery. And it's rare not because it's impossible, but because it requires a deeper kind of trust. Trust that opportunity is not a single shot. It's a series. Trust that you don't need to trade every day to be a real trader. Trust that the money will come not because you forced it, but because you learned to wait. That's the truth that frees you from the scarcity trap. You are not behind. You are not missing out. You are simply learning to trade like someone who has nothing to prove and everything to protect. Let's go deeper. Section 4. The pain of being wrong. You wouldn't think a few red numbers on a screen could hurt this much. It's just a trade. You've seen worse. You sized it properly. You followed the setup. You did everything right. And yet, here you are, staring at the loss, chewing the inside of your cheek like punishment. It feels like something went wrong, not just in the trade, in you. You try to analyze it objectively, but the thoughts come fast. I should have known. I knew that wick looked off. I could have waited. Why didn't I wait? You feel it in your chest, a sharp, bitter pull. You're not just angry, you're ashamed. This is the fourth trap. Making being wrong means something personal. This is the trap that teaches you to fear losses, not because they hurt your account, but because they hurt your identity. You weren't just wrong, you were proven wrong, and in real time, in front of yourself. And worse, it's documented. The chart remembers. Your journal will remind you. Your performance tracker will log it in red. Being wrong feels like failure, not just of skill, but of character. And that's why so many traders twist themselves into pretzels trying to avoid it. They move stops. They hold losing trades just a little longer. They hedge emotionally by sizing down too far or oversizing in hopes of instant redemption. All because they don't want to feel wrong. But here's the secret the pros understand. In trading, being wrong is not a problem. But being unable to process being wrong is. Because if you can't emotionally tolerate being wrong, you will unconsciously sabotage yourself to avoid the feeling. You'll exit too early to lock in a tiny win. You'll avoid taking valid trades out of fear. You'll revenge trade to reclaim your pride. You'll change your system constantly to avoid repeating the pain. And soon enough, you're no longer trading a plan. You're trading to avoid shame. That's how 99% of traders quietly fall apart. Not from lack of skill, but from a refusal to sit with the feeling of not being right. But think about this. If your system has a 60% win rate, that means 40% of the time you're supposed to be wrong. It's part of the math. It's built into the edge. So why do you still react like it's a personal failure? Because deep down, you don't just want profits, you want proof. Proof that you're smart. Proof that you're improving. Proof that you weren't crazy to believe you could master this. And every loss threatens that proof. But here's the pivot you must make if you want to survive this game. A loss is not the opposite of progress. It is progress. It's a vote for discipline. It's a reminder that you stayed true to your rules. It's the price you paid to be in a game of probability. And if you can't accept that price, you're not in the game. You're just gambling with your ego. So how do you fix it? You start by creating a new relationship with the word wrong. You stop using it as a weapon. You stop saying, "I messed up," when what you really mean is, "I followed my system and it didn't work this time." You stop using your emotions as a feedback mechanism for your skill. Because emotions lie. They are ancient systems wired for survival, not performance. When you take a loss, your brain treats it like a physical threat. It floods you with cortisol. It narrows your thinking. It activates fight or flight. But trading doesn't require speed. It requires stillness. So your job is to decondition the panic that follows a red trade. This means practice. You take a loss and you breathe. You write it down without drama. You look for errors, if any, but you don't invent problems that aren't there. You remind yourself, this loss is part of the plan. This is what professional execution looks like. You don't need to feel good about it. You just need to stop making it mean something about you. Because when you stop fearing losses, you start playing the long game. You stop needing each trade to prove something. You stop flinching. You start choosing. You become the kind of trader who isn't trying to be right all the time, just net right over time. And that's what real confidence looks like. Not cockiness, not certainty, but emotional tolerance for being wrong. The kind of tolerance that makes you show up again, trade after trade, even after 3 losses in a row, even after a drawdown, even after a week that shook you. Because you trust something deeper than the last outcome. You trust your system. You trust your process. You trust your ability to show up with discipline, no matter what the chart says. And in the end, Section 5. The myth of perfect timing. You keep staring at the chart, frozen. The setup was almost there. Clean pattern, volume spike, momentum ticking in your favor. But something made you hesitate, just a second too long. Now the move has taken off without you, and it hurts. It's a specific kind of pain, the pain of watching something work without you. You tell yourself it's okay, there will be others, but deep down there's a flicker of self-blame. Why didn't I just click it? Why didn't I trust myself? The moment passes, the trade is gone. But you're not done with it. Because in your mind, this wasn't just a missed trade, it was a missed moment. One that could have made up for that last loss. one that could have boosted your week, one that could have made you feel competent again. And this is where the next psychological trap tightens its grip: the myth of perfect timing. You don't chase perfect setups, you chase perfect moments. The fantasy of flawless execution, instant confirmation, and immediate reward. But trading doesn't work that way. There is no perfect entry. There is only risk managed within imperfection. And yet you still chase that ghost. You replay missed trades like breakups. You obsess over getting in right at the bottom or right before the breakout. You hesitate at the worst possible time, then FOMO rushes in and makes you enter after the move is over. You go from frozen to frantic in one candle, and then you call yourself undisciplined. But it's not discipline you're lacking. It's perspective. You're trying to hit a moving target that doesn't exist. Perfect timing is a myth. Even pros don't consistently nail entries, but you don't see that. Because in your head, precision equals mastery, and hesitation, that must mean doubt, weakness, a flaw in your instincts. But what if it doesn't? What if hesitation is just the pause before a wise decision? What if missing a trade is actually proof that you're respecting your plan? You've been trained by social media, by highlight reels, by your own perfectionism, to believe that success is a clean series of perfect trades, sniper entries, smooth exits, all green days. But in reality, success in trading is messy, it's incomplete. It's made of near misses and second guesses and clumsy wins and boring days where nothing happens. You don't need to time the market perfectly. You need to enter with probability and exit with discipline. That's it. So let's reset your expectations. You will miss trades. You will sometimes be late. You will sometimes get in too early and watch price chop sideways. And none of those things are failures if they happen within the boundaries of your plan. It's only when you tie your self-worth to timing that the pain begins. Because then every late entry is a self-attack. Every missed opportunity is a moral failure. Every candle that moves without you feels like punishment. You feel like the market is mocking you. But it's not. It's just doing what it does. The question is, what do you do with that? Here's what the fix looks like. You create rules that accept imperfection. You stop trying to catch the exact top or bottom. You define a valid entry zone, not a price point. You let the market come to you, and if it doesn't, you let it go. And then you train your brain to not chase the move you missed. Because if you chase after the move has happened, you are no longer trading your system. You are trading your emotions about not being in the system. That's a subtle but deadly shift. Because now your setups aren't setups, they're emotional compensation strategies. And that ends 99% of trading careers. Not missing the move, but trying to emotionally fix the feeling of missing it. So here's a new mantra for you. I don't need to catch this move, I need to protect my process. Say it every time you feel FOMO. Say it every time your finger hovers over the buy button just because price is moving fast. Say it when your chest tightens at a missed breakout. Because not entering can be just as skillful as entering. And staying out of a trade is not failure, it's mastery in disguise. Remember, the edge isn't in your timing. The edge is in your consistency. If your system includes confirmation, you will miss some early moves. That's okay. If your system includes a trigger candle, you will sometimes watch price run before the trigger forms. That's okay. What matters is that you protect your rules, because over time, your edge isn't defined by one great trade. It's defined by how well you execute 1,000 average ones. Precision looks sexy, but discipline compounds. And you can't have both if you're constantly punishing yourself for not being perfect. So let go of the myth. Embrace the sloppiness, the randomness, The reality that sometimes price won't cooperate. And trust this, you don't need to be perfect. You just need to be consistent. Let's keep going. Section 6. The Overconfidence Cycle. You had a good day. Maybe even a great one. 2 trades, both green. One was nearly textbook. The other you managed beautifully. Adjusting the stop, letting it run, exiting near the top. You feel calm, capable, in sync with the market. You tell yourself, this is how it's supposed to feel. And it is. For a moment. But under the surface, something else is stirring. Something subtle. It's not pride. It's not joy. It's the quiet whisper of invincibility. That whisper grows louder with every win. You don't notice it right away. It doesn't yell. It doesn't boast. It simply starts asking questions. Why not size up a little? Why wait for the perfect setup? You're seeing the flow. Why follow that rule so strictly? You've evolved. This is the overconfidence cycle, the 6th trap. It always begins in strength. You earn your wins, you do the work. You follow your system, and it pays you. Naturally, your confidence grows, but here's the tricky part. In trading, confidence is a double-edged sword. When it grows faster than discipline, it becomes a liability. What feels like progress becomes pressure. What feels like insight becomes assumption. What feels like growth becomes entitlement. And before you know it, you're no longer trading your plan. You're trading your opinion of yourself. You think, I've evolved beyond that rule. Or worse, that rule's holding me back. And suddenly your edge begins to erode. Not because the market changed, but because you did. Not out of fear, out of pride. You cut corners. You skip confirmations. You place bigger positions because you can handle it now. And at first it works. That's the bait. Overconfidence feels like intuition. It feels like mastery, but it's not. It's a shift in psychological posture. You stop seeing the market as a field of probabilities. You start seeing it as a stage where you perform. You go from trader to hero. And that's when the fall begins, because the market doesn't care about your hot streak. It doesn't care how in sync you feel. It doesn't care about your gut, your momentum, your vision. It responds only to structure, risk, and discipline. And when your discipline slips, even slightly, it compounds. You start risking more when you're right. You start breaking rules when you're winning. You start forgetting the process that built your progress in the first place. And then it happens. The loss. Not just any loss. The one that snaps you awake because it was oversized, or undisciplined, or completely against plan. And now it's not just a loss, it's a betrayal. You look at the chart, stunned. You ask, how did I not see that coming? You did see it. But you didn't respect it, because in that moment. But the market doesn't reward feelings. It rewards execution. So, how do you fix this? Simple. Treat every win like it came with a warning label. Handle with humility. When you're winning, don't relax your rules, reinforce them. Don't trust your gut. Verify your process. Don't skip journaling because you already know what happened. Document more. Capture the state of mind behind every choice. When you're hot, act like you're cold. When you're in sync, double-check your structure. Because your biggest drawdowns don't come from fear. They come from success without guardrails. Overconfidence is sneaky. It doesn't show up as arrogance. It shows up as casual decisions, a few skipped checklists, a bit of rule bending, justified by, I've been doing well lately. That's how you fall. Not dramatically, but gradually. So here's the mindset shift. Never mistake a green streak for evolution. Your growth isn't in the wins. Your growth is in how you behave after the wins. Can you stay humble? Can you stay patient? Can you treat each trade like it's your first, not your proof? The fix is structure. The fix is procedural consistency, no matter how you feel. Even when you're winning, especially when you're winning. Because the moment you start believing you're above the process, the market will remind you that you're not. This isn't about shame. It's about awareness. Confidence is earned, but it must be managed. And managed confidence is what separates the amateurs from the professionals. A pro doesn't just win. A pro stays grounded after winning. So the next time you have a good day, and you will, watch the whisper. The one that says, "You've got this. You're beyond the basics now." And respond with this: "I'm only as good as my ability to follow my plan." That's how you survive the overconfidence cycle. That's how you become unshakable. Conclusion. From trapped to transformed. So here you are, 15 sections deep. Not just deeper into trading, but deeper into yourself. You came here looking for the trap that ends 99% of trading journeys. And now you know. It was never just about charts, indicators, or strategies. It was about you, your identity, your emotions, your fears, your need to be right, your desperation to avoid being wrong. The trap was psychological, and so is the fix. You don't escape by outsmarting the market. You escape by outgrowing the parts of yourself that demand certainty in an uncertain game. You detach your identity from your outcomes. You trade a plan, not your mood. You embrace boredom, losses, missed trades, and drawdowns as the cost of admission to long-term mastery. And slowly, something changes. You stop chasing. You start choosing. You stop reacting. You start responding. You stop proving yourself. You start trusting yourself. That's the shift. From performance-driven ego to process-driven clarity. From frantic obsession to grounded awareness. From the illusion of control to the power of surrender. Because trading isn't about being perfect, it's about being resilient. And you've already begun. You've seen the trap. You've named it. You've learned how to spot it in the wild. And now you have the tools to move forward, not just as a trader, but as a more self-aware version of yourself. You don't need to rush. You don't need to fix everything today. You just need to keep showing up, with discipline, humility, and the willingness to see clearly. The market won't get easier, but you will get stronger, and that's the real edge.